Macroeconomic concerns, which were really a big portion of that fear, Siddharth, they are sort of abating, and especially you get confidence from the trade deficit data. There was much talk about the oil movement, what with the rupee, and the fact that, you know, there has been that excise duty cut on fuel as well, which the government did take into account, of almost 5 rupees per litre. And what is it that it's going to do to the trade deficit? So fortunately, the trade deficit data which came by last evening, that's come in at a 5-month low. Now it's imperative to see whether or not the rupee has a knee-jerk reaction to that and whether we see a significant strength coming in. But the fact that it's come in at a 5-month low, what one has to see is whether this is an aberration or is this a declining trend that we are likely to see.
See, it is all a function of crude, what will happen to electronic imports and what will happen to rupee. So it actually ties in together. So whether rupee is causing a ballooning trade deficit or whether trade deficit is going to have an impact on the rupee, that's anyone's guess. I mean, you know, it's like a chicken and egg situation. What comes first and what is a fallout of what, I think it's very complicated. But yeah, needless to say, I think we are a crude importing economy. Crude goes lower, the macros become great. Crude goes higher, the macros, they start dwindling around. This is not the best of the environment for macro watchers, and I'm not going to say anything new. But bad macro, Aisha, historically has not always been bad news for stock markets. A classic point here is 2013, horrible, terrible, pathetic macro. But on those pathetic macro cues, the biggest bull run in the mid and small cap stocks actually took a birth. So if you map what the small cap index has done from August 2013 to where we are even after the fall, I guess it's a CAGR return of more than 20%. So is macro important? Of course it is important. Is macro crucial? Of course it is crucial. But in markets, the most important thing which you need to figure out is that how much of the good news or bad news is in the price. Good news may not always translate into straight line gains for stocks, and bad news may not always translate into straight line decline for stocks. So I think markets will react to something which is not in the price, which is something which is not out in the open. The headline adjustment is very, very swift. And you know, just like when we start discussing an aspect here, trust me, investors and money managers, they are also able to change their portfolios very sharply. I'll give you a classic example here. Look at ICICI Prudential's outlook at the beginning of the year on equity. Look at where their outlook is. They've completely become defensive. And when I asked Naren, okay, why have you changed your outlook on crude? He said, look, what can I do? Crude's gone from $55 to $85. You better change your outlook. It's a moving part right now. That's my point. Is a bad trade deficit data in the price? My sense is yes.
You mean the good trade deficit data? It's come in at a 5-month low.
No, I mean the trade deficit data, sorry.
Yeah, so exactly. So it's shrunk to a 5-month low despite higher oil prices. I just want to run through the internals there. You have the entire trade deficit number coming in at $14 billion versus $17 billion in August. And I'm not seeing a marked shift in terms of exports picking up, but largely I think the increase in imports has not been that substantial. And I think that's where the comfort lies. Oil imports have gone up 33%, but I think that's a little short of the long-term trend. And gold imports as well are high by about 51% odd. But it's still, you take what you get, and I think any sort of macro comfort, especially on trade deficit, which is a core component of the current account deficit, is, I think, a positive sign. Add to that, you know, you're talking about RBI buying 12,000 crores GSECs under OMO. There is, you know, the other problem of liquidity, which also is being addressed right now by the central bank. So I think on the macro front, also things are sort of settling down and receding to a point where it's not a clear and present danger.
So that's my point, Tanveer, that has September marked the new bottom for macros, and will macro variables start improving? You know, will rupee eventually settle between 70 and 72? Will crude settle between not 80 and 85, but between 75 or 80, or you know, between 70 and 75? I'm not a subject expert to offer a comment on that, but I think there were excesses which were built in on both the aspects, which is on the liquidity aspect, the concern and the scare, and on the crude and again on the rupee aspect in terms of the level both crude and rupee has reached. things have to normalize. We don't know what the new normal is. I mean, we could be eating our words and say, okay, you know, crude will head to 100. Nobody is a subject, nobody can really predict that. But if I'm an optimistic, I would say that the selling in the adjustment in macro was overdone and normalization would happen in the month of October. So between September and October, a lot of variable factors could change. And a classic example here is what happened a couple of years ago when September was a very terrible macro. The government action kicked in, government started stemming the rupee fall, and things they started improving.